Hello, welcome to the weekly technical analysis review here at xm.com. My name is Rafi Boyajian, currency analyst, and today is Monday, July the 2nd, 2018. The pairs we're going to be looking at for this week are the dollar yen, the pound dollar, and the euro yen. Starting with the dollar yen pair, we can see there is quite a bit of upside momentum in the near term. RSI is heading upwards. It hasn't quite reached overbought levels yet, so there is scope for additional gains in the coming days. Prices did find resistance though earlier in the day at around the 111 level. We would need to see a break above that resistance barrier in order to see more sustainable gains towards that 4 months high of 111.39 we saw back in May. A break above 111.39 would open the way towards the 78.6% Fibonacci retracement of the downleg from 113.38 to 104.62. So that's around the 111.50 level. To the downside, immediate support is around 110.45. That's a previous congestion region. Below that, we've got the 61.8% Fibonacci just below the 200-day moving average, around 110.03, and just below that, the 50-day moving average. If we do see deeper losses, we could see support coming from 109.45, and below that we do have the 109 handle, which is the 50% Fibonacci. In the medium term, the outlook is fairly bullish. We are close to seeing a bullish crossover of the 50-day with the 200-day moving average. However, prices have been consolidating since May. If we do see the continuation of that sideways trading, we could then see that medium-term outlook becoming more neutral, and perhaps we might not even get to see that bullish crossover ever happening. Let's now turn to pound dollar. The pair is it's got a rather mixed picture in terms of the technical indicators. RSI was climbing upwards, but it reversed lower before reaching the 50 neutral level. If you look at the stochastics, though, the percentage K line is still pointing upwards. Prices did see resistance at the 50% Fibonacci retracement of that longer term up leg from 1.1986 to 1.4376. If prices are unable to break above that resistance barrier, we could then see pound dollar heading back towards that 8-month low of 1.3048. A drop below 1.3048 would open the way towards the 61.8% Fibonacci at the 1.29 handle. However, if we do see a strengthening of the upside momentum, we could then see prices targeting the 1.33 handle, followed by the 1.34 handle, just below the 50-day moving average. Not too far above that, we do have the 38.2% Fibonacci at around 1.3460. So a break above that region between the 50-day and the 38.2% Fibonacci would shift the short-term bias to more bullish one. In the more medium to longer term, though, the bearish outlook is still intact. And finally, looking at the euro-yen pair, we do have a weak upside momentum. RSI is just above the 50 neutral level, and the MACD in the past several days has crossed above its red signal line, but there was resistance at the 38.2% Fibonacci at around 129.50 level. So that's the Fibonacci retracement of the downleg from 137.49 to 124.61. We would need to see a break above that key resistance level, which also happens to be the 50-day moving average, in order to strengthen the upside momentum, and then we could then see the next target being the 50% Fibonacci at around 131. However, in order to see more sustained gains and possibly shift the bearish outlook to a more neutral one, we would need to see Euro-Yen being able to target that 2 months high of 133.48 we saw back in April. To the downside, support should come from the 23.6% Fibonacci at around 127.61. A breach of that support would open the way towards the area around 126.50, and dropping below that mark, we could then see Euro-Yen heading back towards that 11-month low of 124.61, and that would reinforce the medium-term bearish picture. That's it from me. Thank you very much for watching, and have a great day.